Welcome, my top 10 people I would trust with my last slice of pizza. Please remember this is not financial advice. Yesterday, Bitcoin closed red on the daily, and even though the weekly candle finished green, it failed to close above last week's high. That's a big deal. That higher high would have confirmed strong upside continuation. Instead, we are right back testing major support. One mistake I see over and over is people treating every red candle like the start of a crash and every green candle like the beginning of a bull run. Professional traders don't react to every candle, they react to confirmation. And right now, Bitcoin hasn't confirmed either direction. Right now, Bitcoin is retesting the 21-day EMA and the 200-week SMA. These two levels have been incredibly important this cycle. If Bitcoin holds here, we still have a shot at pushing higher, but the breakdown here opens the door for a deeper correction. At the same time, the US dollar is holding its own support and its 21-day EMA. Remember, the dollar strength and Bitcoin are negatively correlated right now. As long as the dollar doesn't break out, it's actually giving Bitcoin some breathing room. The entire market feels like it's in wait and see mode. Tomorrow, July 14th, we get the CPI report. Until that number drops, expect choppy low conviction price action. DVOL, Bitcoin's volatility index, closed a couple of small green daily candles, which is not good for Bitcoin. However, the longer-term trend is still clearly pointing down. The real battle right now is happening around $65,000. This is the final major resistance zones for the bears. Around that level, Bitcoin runs into the 50-day EMA, the 50-month EMA, and the major horizontal resistance level that has repeatedly acted as support and resistance throughout this cycle. When multiple technical levels line up like this, they create a high probability reaction zone. If we can clear and hold above 66k with conviction, the path to 67k to 70k opens up fast. On the monthly liquidation heat map, you can see liquidity stacking up nicely on both sides. On the upside, heavy liquidity all the way up to $67,000. On the downside, big pockets sitting at $60,000 and $57,000. That means we are probably going to see a liquidity sweep one way or the other before the next real directional move. So here's the game plan I'm watching. Bullish case, hold the 21-day EMA plus the 200-week SMA, strong CPI or neutral reaction, push through 66k and take out the weekly high, that flips the structure bullish again. Bearish case, lose the 21-day EMA with volume, dollar starts ripping, and we sweep down towards 60 to 57k liquidity. And that's why I posted on X. I just said reserve risk still hasn't hit the extreme opportunity zone, a range that has historically marked undervaluation and prime buy zones. In every bear market phase, Bitcoin has traded below the realized price, which is now at $52,900. So what do you think? Has Bitcoin truly bottomed? Or is the real capitulation still ahead? Let me know in the comments. Have a nice day. Bye.